Hi, I'm Jim Jubak, and welcome to my YouTube channel for Jubak's Picks, jubakam.com, and my new Substack, Economics for Investors. I say welcome because I've been on YouTube chaos, hiatus, getting the new Substack up and then interrupted by 4th of July. I live in Italy at the moment, in Venice. We had a wonderful 4th of July with some other Americans here. We grilled spaghetti and drank Prosecco from Cleveland. Okay, if you are following the news right now, you know that at least a few days ago we had an oil glut. Oil was starting to move through the Straits of Hormuz, coming out of storage. Chinese demand hadn't picked up yet, so we had oil prices. West Texas Intermediate was below 70, Brent was at 72. Well, President Donald Trump may have solved the oil glut by himself single-handedly on Wednesday when he told a NATO meeting, the ceasefire is over, Iran's leaders are scum and they can't, not my word, his, and they can't be trusted. So maybe we're going to begin talking about, the ceasefire is dead. So, we've had a couple of ships attacked in the Strait. Who knows exactly what's going to happen tomorrow? Makes this very, very difficult to invest in. But I think that there are a couple things going on. One is that whatever glut there may be is relatively short term. You've got a lot of stacked up supply behind the Iranian-U.S. blockade. That's all going to come out, but that's not a regular supply. That's big you have a lump of oil, a big surge of oil. So we'll get that. Going beyond that, it depends on how quickly the oil infrastructure is replaced and we get to pre-war production. OPEC recently announced a tiny little, I think mostly PR, increase in production quota of about 1%. The Saudis have recently moved to cut the price they charge to their Asian customers down to around, $51 a barrel for their grade of oil, which is not as big a cut as you might imagine, but still indicative of the fact that supply is, at least in the short term, not the problem. Demand is. The Chinese haven't yet returned to the market to buy oil, and without that Chinese demand, any directional move in price is likely to be steady or maybe even down. This puts tremendous pressure on the budget of oil-producing countries such as Russia. Russia is in a budgetary crisis, talking about legislation in the Duma to seize private savings accounts. Yeah, that's a crisis. So the Russians are sort of trapped in a rock and or oil spill in an oil drum because they need more money. But does that mean that you want to sell more oil, in which case you probably drive the price down, in which case you might get a wash or maybe even less? Going forward, the real issue is going to be trying to rebuild demand. And I think for the Saudis in particular, the issue is going to be trying to rebuild market share. They've lost a lot of market share to the U.S. They'd like that back. They've lost a lot of market share in the energy market to solar, to natural gas, to anything that's not produced that has to get out through the Persian Gulf. And they'd like that back. So the question is what this means for Saudi policy, for players that are not Saudi Arabia, not the UAE, such as Nigeria and Russia. It means really, really tough marketing. There have been stories about Nigerian oil auctions going with no bidders. So glut in the short term, slightly longer term, probably big pressure on prices. And then the question is whether China comes back into the market and whether oil starts to regain some of the market share that it lost. I don't know how you invest in this because it's very, very, very volatile. But I wouldn't be placing big bets on anything unless you're a really good short-term trader. But if you're watching for knock-on effects, the big question is what this is going to do to energy prices and inflation. Inflation is largely determined not by the price of crude, but by the price of refined oil products like gasoline, benzene, etc. So, and those tend to be stickier than oil itself. So I would be watching very carefully to see what happens in inflation over the next few weeks. Thanks very much for watching. This has been Jim Jubak. You can see me in all kinds of ways. More YouTube. Ring the bell so you get a notification of when there are more YouTube videos. You can go to my free site, free internet site. That's jubakpicks.com. 3 portfolios, 1 or 2 posts a day. It's free if you give us your email. You can go to my paid site. That's jubakam.com. 5 portfolios, usually 2 to 3 posts a day. And of course my Substack, which you can subscribe to and pay, or you can subscribe to for free. But it's economicsforinvestors.substack.com. Hope to see you at one of those many, many wonderful opportunities to hear my voice, see my face, read my words. Thanks for watching.